Economic versus financial investments. So we have economic investments and financial investments. So we are going to learn what is the difference between them. Basically, in this unit, you're going to completely learn about what is the meaning of the risk, what are the types of risk, and how to calculate the risks for the future period. Then open a demat account, learn how to trade in stock market, and submit a report on prospectus and challenges of stock trading. Hello students, I welcome you to the first session of the 6th semester. So I'm taking the investment management subject for you. I would just want to give my brief introduction. So my name is Vaishnavi. I'm the Faculty of Commerce from Vidhyaashram First Grade College, Temple of Excellence. So in today's sessions, we are going to discuss briefly about the subject introduction of the 6th semester subject, that is investment management. So we'll see one by one. So this is the detailed names of your unit. So we have Unit 1, Concept of Investment, Unit 2, Fundamental Analysis, Unit 3, Risk Investment, Unit 4, Technical Analysis, Unit 5, Portfolio Management. So these are the 5 units you're going to have. So the subject I've told, that is investment management. It is a discipline specific course, elective. So there is 3 hours for you every week. So we'll see in detail what are the concepts that we are going to cover in each unit. So in the first unit, we are going to start with the concept of the investment, basic introduction of the investment. What is investment? Introduction, meaning, definition, objectives of the investment, and why you need to adopt a technique or why you need to adopt a habit of investing. So introduction part, then attributes, what are the different kind of attributes in the sense, what are the features of the investment. So how it should be, what kind of investment portfolios you should take care of. So what kind of investment options you are going to have, what is the benefits of the investment. So all these, that comes under the attributes. Then economic versus financial investments. So we have economic investments and financial investments. So we are going to learn what is the difference between them. Next, we are going to learn about investment and speculation. So what kind of that means, depending upon your portfolio or depending upon the policy that you have invested on. So you're going to speculate what will be your rate of return on the investments that you have done. And the features of a good investment. So what are all the basic features of a good investment policy or good investment portfolio that you need to look into before investing. Next, investment process. So how we are going to start with the investment process. It's a step-by-step procedure. Then next, you're going to learn about what are the different financial instruments we have got. So we have 2 types of instruments, money market instruments and capital market instruments. Money market and capital market. So money market instruments are like for a short-term purpose, whereas capital market is for the long-term purpose. So we are going to learn what are the meaning of money market. So what are the different types of money market we have got, and we're going to learn about what is capital market and what are different kind of investment options you have in case of the capital market, and we're going to learn about the derivatives. So this is the first unit. Next unit, you're going to learn about the fundamental analysis. So the name itself, you can tell that it's a basic analysis of the investment options you are going to get. So under that, the basic meaning of fundamental analysis, EIC framework. EIC is nothing but economic, industry and company framework. So if you are going to start with the investment, so they have different kind of options. So you can invest in kind of economically related projects, industry related projects and company related projects. So depending upon the growth of those 3 sectors, you are going to invest it. So we are going to learn what is the basic of the attributes that contribute to the development of these 3 sectors, that is EIC framework. Then global economy. The name itself, you can tell the overall international economy I've got. Then domestic economy, so that means your local stock markets or local investment markets we have got. And business cycles, so the basic of the life cycle of each and every business or any kind of industries. Then in industrial analysis and company analysis. So these that I have told you are going to learn under the EIC framework. Next is valuation of securities. So under that, you're going to learn about what is bonds, valuation of bonds, what are different kind of bonds we have got, and what the different valuation techniques we have got, and debentures. And we are going to learn about what is preferences and what is the different types of preferences we have got, and what is the procedure for valuation of preferences. And equity shares as well. So equity shares are the shares that are kind of a ownership shares. So we're going to learn about equity shares here. Then no growth, normal growth and supernormal growth rate of equity shares, preference shares, and valuation of bonds and debentures. So we are going to learn basically all the theoretical aspects of the analysis of fundamental. Next, we are going to learn about risk and return. So what is risk? So what are the different types of risk we have got? The concept of the risk, types of risk. So we have three types of risk: systematic and unsystematic risk. And we're going to learn about what are the different kind of risk analysis, that is through calculation of the risk and returns. So you're going to get a small problems or calculations regarding the calculation of the risk. Then what is portfolio risk and return? Expected return on a portfolio, calculation of portfolio risk and return. So basically in this unit you're going to completely learn about the what is the meaning of the risk, what are the types of risk, and how to calculate the risks for the future period. That means you're going to predict the risk that you're going to get in the future period. So all these in this unit you're going to get the calculation part. Next, in the fourth unit, you're going to learn about the technical analysis. So it is a continuation for the fundamental analysis. In the fundamental analysis, you're going to basically learn about all the fundamental aspects of the investment sector, whereas in case here you're going to learn deeper regarding the technical part. So under that, the basic introduction of the technical analysis concept and theories. So we have got two kind of theories, Dow theory and Elliott wave theory. So these are the theories given by the authors, so the famous authors. So we are going to learn what the authors have told about the basic analysis of the investment options we have got, that is Dow theory and wave theory. Next, charts. What are the types of charts we have got? So we have trend analysis, then we have trend reversal patterns. So there are two types of charts we have got. So we are going to learn about what are those. Then mathematical indicators, moving averages, ROC is return on capital, and RIC and market indicators. Then we are going to learn about market efficiency and behavioral finances. So that is regarding random walk and efficient market hypothesis. So all this you're going to learn here in case of the regarding trend analysis. So we have got moving averages, we have got return on capital calculations, and you're going to learn about market indicators. Under that, you're going to see what is a basic indicator, that is market efficiency, behavioral finance, and random walk and efficient market hypothesis. Then next we're going to learn about what are the forms of market we have got. So we have got efficiency market, empirical market, and then empirical test for different forms of market efficiency. So all these are regarding the technical part. So you're going to learn in detail about the calculations and technical part of the investment portfolios. This is regarding the unit 4. Next, in unit 5, you're basically going to learn about the portfolio management. So portfolio management is just nothing about, so there are different kind of portfolios you have got. Say, for example, if you want to invest in mutual funds, so mutual fund is a portfolio. If you want to invest in shares, so shares is a portfolio. If you want to invest in options, that is call money or any money market instrument. So money market instruments, we have got again different kind of options we have got. So we have call money, put money. So like that, there are different kind of things are there. So each and every kind of investments will be called as an portfolio investment. So we are going to learn about what is a portfolio management, the basic meaning of the portfolio, need, objectives, process of portfolio management. So what is a step-by-step process? So in order to start your portfolio investments, then you're going to learn about selection of securities and portfolio analysis. So how to select a proper portfolio, how to select a proper plan or policy for your investments that you're going to learn here, and construction of optimal portfolio using sharp single index model. So this is a kind of a method. So that will help you to analyze the different kind of portfolios and how to select them based on the returns and based on the ROC that you are going to get, that is return on capital you are going to get. So that you are going to learn here. And portfolio performance evaluation. So next is about it is about only the evaluation of the portfolio, that is how it is going to analyze or how it is going to perform in the future days. So regarding that you are going to learn. So this is regarding the unit 5. So in this unit 5 you are completely learning about the portfolio management. So how to manage it, so how to calculate the risk, so how to analyze the the return on capital or return on investment that you're going to get on the particular portfolio that you have invested. So that all the basic theoretical aspects you're going to learn in the unit number 5. So these are the 5 units you have got for this semester. Next, we are going to learn about the different skill development activities. So you can see, so you have to collect and compare the data on financial instruments selected for investment from any 5 investors. Then open a demat account, learn how to trade in stock market, and submit the report on prospectus and challenges of stock trading. Then next, skill development, discuss with investors on systematic and unsystematic risk analysis, submit the report on the same. Then calculate the intrinsic value of any 5 bonds listed on Bombay Stock Exchange or National Stock Exchange, making necessary assumptions. So these are the basic skill development activities that has been prescribed by the University of Mysore. So next, we are going to see what is the marks allotment for this semester. So first is regarding the continuous and comprehensive evaluation, that is your internals marks, that is 20 marks, and then internals test you have got another 20 marks. So basically the totally you are going to get 40 marks for your internals. Then next, for the semester examination, you're going to learn you're going to write for the 60 marks. So totally you're going to write for the 100 marks. So for minimum marks for a pass percentage, 35% marks in semester end, that is 21 out of 60. So overall you should get 40 out of 100 marks to get passed in this subject. Next, this is regarding the internal assessment pattern. So you're going to have 1 hour duration. So under the part A, 5 marks, 2 questions will be given, 1 should be answered. And a part B, again 2 questions will be given, 1 should be answered, and each question carries 10 marks. And at part C, again 2 questions will be given, and each question will be carrying 15 marks. Next, this is your semester examination pattern. So as I've told, overall you're going to write for 60 marks. So the total duration of the examination will be for 2.5 hours. So first pattern, that is, first part A will be answer any 5 questions of the following. Each question carries 2 marks. So they will be given the 7 questions. So you should answer any 5 questions, and each question will be carrying 2 marks here. Next, part B is answer any 2 of the following questions. Each question carries 10 marks. So next, here you will be getting 10 marks questions, and you have to write any 2 questions out of it. Under part C, answer any 2 of the following, and each question will be carrying 15 marks. So 15 marks questions will be there under part C, and you should answer any 2. So this is your question paper pattern. So part A, 5 questions you should answer, and each question is carrying 2 marks. Part B, 10 marks is there, and you should answer 2 questions. Part C, 15 marks is there, and you should answer 2 questions. So totally 60 marks is there. So 40 marks is for the internals and 60 marks is for your written examination. These are been prescribed by the University of Mysore. You can look into the screen, and you can take a note down of this. So if you get these books well and enough, so you can go to the nearest bookstore and you can search for these kind of books that is easily available in online as well as in any kind of the bookstore. So these are the prescribed books given by the University of Mysore. So as I've told, investments in the investment management, you're going to basically learn about the concepts of the investments, types of investment portfolio we have got, risk returns, what is the calculation of risk, so what are the types of risk we have got, portfolio management, and some theories given by the main authors that have contributed for the developments of the financial sector or financial subject. So here we are going to learn all the things basically for your starting the investment in your future. So these are important subject that you need to learn about. So it is not only helpful for you for your examination, but it will also help you for your future investment decisions as well. So I request all of you to buy the books now itself. Start with a small revision of it. Just get a small introduction about the basic concepts so that you can catch the concepts when I'm explaining in detail in the coming sessions. So I'll meet you in the coming sessions. Thank you so much.